Good morning and welcome to TOI Japan Market Radio, coming to you from Tokyo on Friday, February 27, 2026. I'm your host, and this is our daily briefing designed specifically for global investors tracking Japanese equities, foreign exchange, and policy developments. We're here to help you make sense of what's moving in Tokyo and why it matters for your Japan exposure.
Thanks for having me. Today was quite a remarkable session for Japanese markets. The Nikkei 225 closed at 58,850.27, up 0.165%, marking the third consecutive day the index has hit a record high. TOPIX performed even better, climbing 1.3% to 4,131.0, suggesting broader market participation beyond the large caps. The Mothers Index, which tracks smaller growth companies, surged 3.532% to 2,433.0, while J-Rights were under pressure, down 1.324% to 2050.0. On the currency side, dollar-yen traded at 155.975, down a modest 0.144%.
So we're seeing record highs again. Let's dive into what's driving this momentum. The main story today is the continuation of this three-day rally, with reports suggesting policy optimism is the key fuel. Walk us through what's actually happening here and why markets are so confident right now.
Absolutely. What we're witnessing is sustained buying driven by expectations around potential policy announcements or support measures. When you see the Nikkei closing at record highs for 3 consecutive sessions, it's not just momentum traders. It signals genuine institutional confidence in Japan's economic trajectory and corporate earnings outlook. Policy-driven rallies like this typically reflect market expectations for either fiscal stimulus, continued monetary accommodation from the Bank of Japan, or structural reforms that could enhance Japan's medium-term growth prospects. This is psychologically significant because Japanese equities have experienced considerable volatility over the past several years, and sustained record highs suggest a shift in sentiment.
That optimism is clearly reflected in the TOPIX's stronger performance compared to the Nikkei today. What does that broader participation tell you about the durability of this rally?
It's an encouraging sign. When TOPIX outperforms the Nikkei 225, it indicates that the rally isn't just concentrated in a handful of export-oriented heavyweights. We're seeing domestic-focused companies participate as well, which suggests investors are gaining confidence in Japan's internal economic momentum. That said, valuations at all-time highs do warrant careful monitoring. Sustainability of these gains will depend on whether the anticipated policy measures actually materialize and whether corporate earnings can justify current levels. For foreign exchange, this policy optimism could be a double-edged sword for the yen. If the measures signal genuine economic strength, we might see yen support, but if yields remain subdued relative to other G10 currencies, that could cap any appreciation.
Speaking of policy, there's been a major development in Japan's semiconductor ambitions. Rapidus, the state-backed chip manufacturer, has secured $1.7 billion in new funding. This seems like a significant milestone for Japan's industrial policy. Can you break down why this matters beyond just the chip sector?
This is a critical story for understanding Japan's long-term economic strategy. Rapidus is working toward mass production of advanced semiconductor chips, particularly sub-2 nanometer technology nodes, which represents the cutting edge of global chip manufacturing. The $1.7 billion capital injection demonstrates the Japanese government's serious commitment to rebuilding domestic semiconductor manufacturing capacity. This matters for several reasons. First, it's about strategic autonomy. Semiconductor manufacturing is essential for Japan's technological independence and supply chain resilience, especially given ongoing geopolitical tensions and the global chip shortages we've seen in recent years. Second, it's a core pillar of Japan's economic security strategy, continuing industrial policy themes that date back to the Abenomics era.
And if Rapidus succeeds, Japan would be competing directly with TSMC, Samsung, and Intel in advanced logic chips, correct?
Exactly right. Japan has ceded significant ground in this segment over the past decade, so success at Rapidus would be transformative. For Japanese equity markets, this is likely positive for semiconductor-related stocks and the broader industrial supply chain. You could see modest positive sentiment for domestically focused Japan equities as this national champion advances. However, this is a multi-year story. The direct impact on foreign exchange is minimal in the near term, though long-term successful chip production could support Japan's trade balance and provide modest yen strength over time. For JGB yields, there's negligible immediate impact, no real implications for fiscal sustainability or monetary policy at this stage.
Meanwhile, in corporate news, we saw a standout performance from Mitsubishi UFJ Financial Group today. The stock jumped 4.86% and was the most actively traded name on the Tokyo Stock Exchange. That's a significant move for Japan's largest bank. What's your read on what drove this?
MUFG's rally is particularly noteworthy because the bank is a true bellwether for Japan's financial sector and broader economy. A 4.86% surge combined with the heaviest trading volume of the day suggests significant institutional repositioning and market-wide attention. While the article doesn't provide extensive detail on the specific catalyst, the magnitude of the move tells us something important is happening. As a systemically important megabank with substantial domestic and international operations, movements in MUFG stock often reflect investor sentiment toward Japanese financial stability, credit conditions, and the overall economic outlook.
And given MUFG's weight in the major indices, this would have provided meaningful support to the broader market today.
Absolutely. MUFG is a top 10 constituent of the Nikkei 225 with roughly 7% weighting, so a rally of this magnitude provides a meaningful tailwind to the index. More broadly, financial stocks typically comprise over 20% of TOPIX, so sector strength directly supports overall market momentum. For JGB yields, a rally in bank stocks could modestly support yields if it's driven by higher interest rate expectations or improved net interest margins, which would benefit from an eventual Bank of Japan tightening cycle. However, without complete clarity on the underlying catalyst, the directional impact remains somewhat ambiguous. On the yen side, I'd expect limited direct impact, though the risk on sentiment from financial sector strength could provide modest yen weakness as investors increase risk exposure or adjust carry trade positions.
So bringing it all together for our global investors, we have 3 consecutive record closes for the Nikkei, policy optimism driving sentiment, major progress in Japan's semiconductor ambitions, and strong performance from the financial sector. How should investors be thinking about Japan exposure in this environment?
It's a nuanced picture. On the positive side, we're seeing genuine breadth in this rally, not just a narrow move in a few mega caps. The TOPIX's outperformance and the surge in the Mothers Index suggest investors are willing to look beyond the usual suspects. Policy expectations are clearly providing a supportive backdrop, and we're seeing evidence of Japan's long-term industrial strategy taking shape with developments like the Rapidus funding. The financial sector strength adds another layer of confidence. However, investors need to be disciplined about valuations at record highs. The key question is whether policy measures will materialize as expected and whether corporate earnings growth can justify current prices. For foreign exchange, dollar-yen around 155.975 is relatively stable, but policy divergence between the Fed and the Bank of Japan remains a critical variable to watch.
And on the fixed income side, what are you watching most closely in terms of JGB yields and Bank of Japan policy expectations?
The yield curve is the key signaling mechanism here. If policy hopes are already priced into a steepening curve, we could see 10-year yields face upward pressure if stimulus expectations prove robust. Conversely, any dovish policy surprises could limit yield expansion. The Bank of Japan's messaging in the coming weeks will be crucial for understanding whether this rally has fundamental support or whether it's primarily sentiment-driven. For global investors with Japan exposure, the interplay between fiscal stimulus expectations, corporate earnings delivery, and Bank of Japan policy will determine whether this record high is a new platform for further gains or a near-term peak.
Excellent context as always. So to recap for our listeners, Japanese equities closed at fresh records today with the Nikkei at 58,850.27 and TOPIX at 4131.0, driven by policy optimism and broad-based buying. We're seeing Japan's industrial policy take concrete shape with Rapidus securing significant semiconductor funding, and financials are showing strength with MUFG surging nearly 5%. The themes to watch are policy delivery, valuation sustainability, and Bank of Japan positioning.
That's a concise summary. For investors, this is a moment to stay informed and disciplined. The momentum is clearly positive, but record highs always require careful risk management.
If you're following Japan's markets and want daily updates like this, please consider subscribing to TOPIX Japan Market Radio. We're here every trading day with analysis tailored for global investors tracking Japanese equities, foreign exchange, and policy. Thanks for listening, and we'll see you next time.